2019, the bank continues to deliver on its strategy to be the most important relationship for the financial success of business owners. We do this through funding, training, and mentorship through our BizSmart Challenge program. We offer halal business advisory service through our Alliance Islamic Bank's one-stop halal business solution. And we continue to support businesses through loan options such as the SME Express loans, the CGC Portfolio Guarantee Scheme. Our Alliance at Work initiative acquired close to 1,400 new company payroll accounts and over 25,000 new employee CASA during the year. In short, it has been a good year at the bank as we continue to deliver shareholder value. Now, before we proceed with your questions for our spokespersons, we have two requests. Please raise your hand for the cordless mic as we would like to hear your question clearly. My colleagues are on standby in the aisle with the mics. Also, before you ask your question, please state your name and the publication that you represent. May we have the first question, please?
Theo from CTU Business. We are now, what is the outlook for new financial year and what is your loan growth target? Thank you.
Theo, thank you for your question. Loan growth target for the new financial year is 7% overall. Obviously, the focus will be primarily on SME and consumer. In SME, we will aim to get closer to 10% growth. In terms of the overall outlook, we note that the economy is a little bit more challenged right now, and we see a little bit of headwinds. We think we're going to continue to be able to grow the business and to serve our consumer and SMEs especially better. We have a lot of developments in the pipeline to do that. We have just piloted a system to onboard businesses digitally without any paper, and our aim is to be able to open these accounts in one day, in one visit. We're also working on digitizing the unsecured lending to SMEs. We obviously, our aim is to continue to help businesses be successful. You know, SMEs comprise 97% of the companies in the country. So you know that we've launched a CGC program end of last financial year. We now have a new tranche of 350 million that we're availing to these companies, and our aim really is to help them through easy times and tougher times to be successful and to develop. By the same token, we'll be offering trade services digitally as well this financial year through electronic bankers acceptance and trust receipts. So I think there's a lot of things that we're doing and in the pipeline in order to improve the service, serve those customers faster, help them manage their businesses better, finance their businesses better, and get more business. In addition, we have new advice tools that we're also rolling out for SMEs. So while the economy is experiencing some level of slowdown and some companies are experiencing some stress, we keep progressing, to serve them better. While at the same time, of course, monitoring our portfolios very vigilantly.
Any other questions? Yes.
Your loan growth target, right? Your loan growth target, I believe it's quite a big difference from what was targeted for FY19. 10%. Maybe you could explain that. And also, do you have any targets then for net profit or revenue?
Okay, so in terms of the loan growth, we had targeted, you're right, we had targeted 10% for FY19, and we ended up at 6%. The reason for the difference primarily was because in our commercial and corporate book, the loan demand was substantially lower due to the effect of the slowdown, especially of key large projects. While at the same time, actually, we exceeded our goals in the SME. For FY20, Of course, we continue to see headwinds, although we do see that the momentum for SMEs stays very strong. So we adjusted the goal to hopefully get as close to our goal as possible. We don't like saying 10% and getting to 6, right? So hopefully we can achieve the 7%. In terms of profit, I think it's a little bit early to prognosticate, precisely because we do see some stress in some companies. Although I think we have a very robust early warning system, and but now it's still too early to see exactly what's going to transpire. But we do believe there will be significant revenue expansion, there will be significant loan expansion, there will be improvement in services, and I think that we'll still come in with a creditable performance, but we don't know, at this stage, I don't want to say a ballpark figure. I don't want to prognosticate when I'm not 100% sure.
But do you think your profit would be affected by the OPR cut?
The profit is undoubtedly affected by the OPR cut. That's there's no doubt about that. But at the same time, we continue to shift to higher risk-adjusted return loans, so that will dampen the effect on the margin. So we believe the margin will still be around 2.4, 2.45 this year. So I think we can mitigate a significant portion of this of the OPR cut. But there's no doubt that that has an effect on the revenue and profit.
To what extent do you see that effect?
So the gross impact is 40 million for the year for the company. Just looking mechanically at the repricing of our loans and deposits. But we believe we can mitigate a significant portion of that through either some repricing mechanisms, but most importantly through the continued improvement of the mix of our loans. So that's why I'm saying, we ended FY19 with 2.5% of net interest margin. So we think we're going to end up between 2.4 and 2.45. So it has some effect, but we can manage most of it.
Any other question? Perhaps on the left side of the room? Yes?
Hi, this is Douglas. So you were targeting 10% of the SME loan balance growth this year, 2020. So other than the slowing down economic condition, do you see a strong competition in SME space? And what are the agents you have to make you stand out from the other banks?
Okay, I love this question. I think, you know what, we are we're very proud and very determined when it comes to our SME business. We say our strategy is to be the most important relationship for the financial success of business owners, and we mean it. We want to make these businesses successful. So the things that we've been rolling out are expansion in loan terms. So we're rolling out an expansion of the scoring program, so that allows us to evaluate SMEs faster and more effectively to give them loans. I mentioned CGC previously. We launched last year the SME Express loan, which is an unsecured loan, and we're doubling up on that this year. It's performing extremely well, by the way. We launched tools to advise the SMEs. So basically, it's calculators to allow you to understand the dynamics of your financials, and also to allow us to advise better on the structure and the quantum of financing that's required and that can be obtained by the company. And we're going to enhance that further with benchmarking information. So for each sector, we'll provide the benchmarking information to the company so that they can measure their performance relative to others and see how they can improve their own performance. At the same time, we'll be launching digital unsecured loans for SME. At the same time, we've also already launched a digital onboarding for companies. And our ambition is to be able this financial year to onboard a company digitally in 1 day and 1 visit, the whole process, including registration and activation of their online access. And we'll also be launching a mobile SME, mobile access for companies. And within that mobile access, trade tools that will be digital, so for bankers acceptance and trust receipts. So you can see, actually, if you think about the themes, it's the conditions of financing, so the quantum and the price, it's the process and the speed, and it's the advice and digitization. And we're putting a lot of effort in really accelerating our efforts to give all of that to SMEs. So we're actually very, very sanguine about our ability to make a difference in the market and to compete very, very effectively. And you can see last year, the whole market contracted while we grew 11%. And this year, we believe that we will continue to stay ahead of the market thanks to all of these innovations.
Hello, Danny from Utusan. You talk about digitalization. Do you mind to share how much allocated for that and any update on the union issue?
I'm not sure what's the link between the two, but on digitization, we're investing 50 million ringgit this year in capital expenditure for digitization. May not sound like huge, but it's a continuation of our efforts, and I think we're doing it more and more effectively. In terms of, I think you're referring to a judgment that was rendered 2 weeks ago. So actually, to give context to this judgment, in 2012, a number of employees were promoted from clerical to executive. In the clerical function, they were covered by one union called NUBE, and in the executive function, they're covered by a different union called HABOM. So all these employees were in fact promoted from one union to another union. Covered under one union and then covered under another union. So from our perspective, there's really no issue. In fact, their benefits only improved in the process. But the judgment that was rendered 2 weeks ago was just a technical judgment where we were challenging a pronouncement by the Ministry of Labor in 2014 that was saying that these employees that were promoted were not having extra executive duties. We don't believe that is correct, and so we asked for the Ministry of Labor to produce the research that led them to this pronouncement.